I'm Sarah, a tutor at Accountancy Learning, and in this video I'm going to take you through the Tax Processes for Business AAT Sample Paper 1 Task 4. So this task then is about preparing, calculating and adjusting information for VAT returns. Our first question here then, we're told that Detra Limited prepares VAT returns for the quarters ending 31st of March, 30th of June, 30th of September and 31st of December, and they don't use a special scheme. Dimitri is assisting with the preparation of the VAT return for the quarter ending the 31st of December 2023. Part A asks us to identify which of the following records are not relevant for Dimitri to prepare the VAT return for the quarter ending 31st of December 2023. So we're looking for records that are not relevant, and we're for the quarter end 31st of December 2023. Now, at first glance, if you go just to go and have a look at the dates that are given in the options, we've got October and we've got November. So you may think, well, they are all relevant. But actually, there's not. So first of all, the bad debts written off in October, they are going to be relevant because we claim back the VAT on a bad debt. We need our bank records for October 2023 to complete the VAT return. And we need our sales invoices for November 2023 because we've charged VAT out, so we need to calculate that. So the one that we don't need that isn't relevant is our inventory records for November 2023. In the next question then, we're told that Dimitri has identified that some errors were made in the previous VAT quarter to the 30th of September 2023. And we've got two tasks here. For each error, we need to calculate the adjustment to be made to VAT, and we must round down the answers to the nearest penny. And then we need to identify what the impact is on VAT. And that's a drop-down box, and these are the options that you are given. So in the exam, you'll be able to choose from the drop-down. So first of all then, a sales invoice to a customer for £3,120, including VAT at the standard rate, was not posted in the accounting software. So if it hasn't been posted, then that means we need to put it into the accounts. So first of all, we need to work out what the VAT is. So we're given the gross amount of 3,120 because it's including VAT at the standard rate. So we need to divide by 120 and times by 20 to get our VAT. Or if you prefer the decimal method, divide by 1.2 and multiply by 0.2. That will give you a VAT amount of 520. And remember, we're going to the nearest penny, so we need to go to two decimal places. So what's going to be the impact from the options that we're given? What's going to be the impact on our VAT? So as this sales invoice was not posted into the accounting software, that means that output VAT, so we're going out to customers, it's our output VAT, hasn't been included in our figures. So therefore, by making the adjustments to correct the error, we are going to end up increasing our output tax. A bit clearer. Okay. The second one then is a credit note from a supplier for 528 plus VAT at the standard rate was recorded twice in the accounting software. So a credit note from a supplier has been entered twice. So therefore, it's going to have reduced the input tax. So when we buy something from a supplier, that is our inputs. So for all of the purchases that we make, we're going to be claiming back input tax. When we get a credit note from a supplier, it reduces the input tax that we can reclaim. So because it's been entered twice, it means that the reduction to input tax is actually double. So we're told that the 528 is plus VAT. So that's going to be our net amount. So we then need to multiply it by 20%, or if you prefer decimals, 0.2. And that gives us £105.60. So that's going to be our adjustment, because for each of the credit notes that were entered, so we've entered it twice, remember, £105 has been put in incorrectly. So our adjustment amount is £105.60. Now, as I was saying before, because the credit note reduces the input tax, it's been reduced twice. So by correcting the error, we're actually going to increase our input tax. Part C then. So for Part C, we're told that Detra Limited trades internationally. Dimitri has asked you to help him understand about postponed VAT. Complete the following statements to assist Dimitri. So here we said postponed VAT relates to the, and then we're given export or import as an option, of, and then it's both goods and services, goods only, or services only. So we need to select an option for both of those drop downs. So we can use our reference materials for this question. So I'm going to bring up here reference material 8. And we can have a look at what this says about postponed accounting. So the first part of the question is postponed VAT relates to the, and we've got to choose between export or import. And we can see here that import of goods, UK VAT applied using postponed accounting. So it's going to be on the import only. Then we need to identify whether it's goods, services, or goods and services. So again, using this reference material, you can see that it's only on goods, because at the bottom here, you've got import of services where the reverse charge applies. So the answer to the question will be it's import of goods only. Then the second statement in part C is postponed accounting, and then it's either accelerates or delays the payment of VAT. So the clue then is in the word here, postponed. So when we postpone something, we delay it. And that is the end of task 4.